Bulls are back in the fight. That was a big day. The math adds up when tech leads. Somewhat against my better judgment. I'm going to make a shift to my risk radar where the red light has been on stocks. I'm turning it yellow because today was big, but I feel we have potential for even bigger moves from here into the weekend. The fact that we've gotten this massive rally in NVDA today, it's the most important thing to see tech lead again. The whole reason why I've had a red or yellow light throughout rotation is because rotation is not good math for the index. Now, however, the reason I'm not turning stocks green, just yellow for now, because I'm convicted there's a big move coming. I don't know which way, but I don't want to have a red light if the big move is to the upside. Here's the bottom line. Today reinvigorated the entire thesis for the tech trade, and that is absolutely crucial. But technically on the charts, we haven't made the big break out yet. Let's look at the past 10 days, really, taking it back a couple weeks. Well, firstly, Meta and ARM, okay? Firstly that. Look at the intraday action here. It's good to see Meta rallying. That was a really pure number from Meta. There's questions about expenses. There's questions about whether or not all this stuff is going to pay off. But the bottom line is just when the market has these big rallies after reports, it's exactly what you need to tourniquet the bleeding in the stock market generally. Meta up big in the blue, ARM down big in the white though. That's kind of the first point here, is that ARM's numbers were pretty good too, but you still have a valuation problem in tech for a lot of these. Meta, you don't really have a valuation problem so much. It looks pretty good for 23 times, but ARM, absurdly expensive, totally different story. So that tells you there's still a push and pull within the market in some of these very important categories. It's valuation based, and generally the valuations look more discouraging than encouraging at this point. But really crucially is the chart of the S&P 500. If you look at the intraday for the SPX over the last 2 weeks, we filled the gap at 5,500, but we didn't actually put in the higher high. So that's where we're definitely not uptrending. Technically, I think we still might be downtrending, but it's tricky because we did put in higher lows now over the last 3 days. We put in higher lows in the SPX, and that's crucial because that's the first step to trying to turn things around. We put a higher low in yesterday, and actually Friday and Thursday we put in a little marginal higher low as well. The gap up here brought us back into the 55, this old gap on the way down, but technically we're still below where we were last week on Monday. So you need to really trade into the 56 area to put in a higher high. And then it seems like we really have a shot at the all-time record. Technically, though, we're still downtrending for the S&P over the last 20 days, which is why I feel like, it's downtrend red light, but I'm going to give bulls the benefit of the doubt because this really could go either way. The market's basically telling us today that it's celebration from the Fed. Powell telling us that they're getting ready to cut. They see the balance in the market. They're worried a little bit about labor, which they should be, and that means they're going to start to provide some easing. I generally side with the message we heard from Cam Harvey today that the signs of unemployment and yield curve uninversion are all the things that are typically late cycle behavior when the recession is really taking shape underneath. But if Friday's employment report goes well, and if Apple doesn't drop the ball, that could be the hat trick for bulls. So that's why I want to have the yellow light on instead of red, because there's a possibility here that really everything goes smoothly. So far, the earnings this week have generally been positive. Even though Microsoft was down, the fact it was up so big for NVIDIA makes it a positive report, because NVIDIA matters even more. The catch with NVIDIA too, though, is that it's got a lot of resistance on the chart coming up. That's why we're still a good ways away from having the green light on stocks, because NVIDIA's got to really fight to reclaim 120. That's going to be a tough level to get through. So that's another reason that there are still limitations here. But if you get the earnings to go as well as they have been so far, generally, Powell today was well received. If employment is surprisingly strong on Friday, that would be the hat trick for bulls to make us feel that we've really got the soft landing and we can have that high correlation rally instead of a high correlation sell-off, but I'm not quite convinced just yet.